Have you ever just stared at a chart and wished you could actually understand what the market is thinking? I mean, really thinking. Forget all the loud news headlines for a second. We're about to tune in to the market's silent language, the one it speaks through these little things called candlesticks. It's time to decode the stories the charts are really trying to tell us.
And that's a powerful question, isn't it? We're so used to being bombarded with financial news and so-called expert opinions. But the most valuable signals, they're often the quietest ones. They're those little moments of pause, of indecision, that get captured by just a single candle on a chart. And that's exactly where we're going today, into that silence, to find the whispers of the next big move.
Okay, first things first, we've got to set the stage. Our story here begins in a market that's just starting to heal, maybe after a big fall. This is such a critical time, and if you know exactly where to look, you can spot the very first signs of a real comeback. So where do we start looking for those clues? Well, it turns out history kind of gives us a map. Two sectors often act like the canaries in the coal mine when a market is recovering: metals and autos. When you see these start to stir, it is definitely time to pay attention.
But why them? Just think about it for a second. You don't go out and buy a new car, and companies don't start building new factories if you're worried about the economy, right? So when the big players, the smart money, start pouring cash into metals and autos, it's a huge vote of confidence. They are betting on a brighter future long before it's obvious to the rest of us.
All right, so we know where the smart money might be looking, but how do we see the exact moment the tide starts to turn? For that, we have to zoom in. We're going from the roar of entire sectors down to a single quiet whisper on the chart. And that means it's time to meet the doji candle.
A doji is absolutely fascinating. It's a candle that tells the story of a perfect stalemate. The price opened and closed at almost the exact same spot. What that means is, for that entire period, neither the buyers nor the sellers could get the upper hand. It's literally the market taking a deep breath, just pausing to decide where it wants to go next.
And listen, this is the most crucial point to remember. A doji all by itself is not a signal to buy or to sell. It's a signal to pay very, very close attention. It's the market basically tapping you on the shoulder and saying, hey, something is about to happen here, but it hasn't decided what that something is just yet.
Now, here's the thing. Not all indecision looks the same. The doji has three main personalities, and each one tells a slightly different story about that battle that's going on between the buyers and the sellers. So let's break them down. Okay, each one of these candles tells such a unique story. The long-legged doji, that's just pure chaos, a wild tug-of-war where both sides are exhausted and nobody's won. Yet, then you have the gravestone. It's kind of like a tragedy for the buyers. They push the price way up only to get slammed right back down, leaving this tombstone as a marker of their failed attempt. And the dragonfly is the total opposite. It's a story of heroism for the buyers, who swooped in at the last second to rescue the price from a nosedive. Each one whispers a totally different secret about who might win the war.
Okay, so you've learned the basics, but now we're getting into pro-level territory. Because sometimes the market doesn't just whisper to you. It actively tries to trick you. It uses a pattern that looks like one thing, but means the complete opposite. This is the art of deception. This next idea is a real gem, and it's taken directly from the handwritten notes that inspired this whole explainer. This is a concept that you won't find in every textbook, and it really separates the novices from the seasoned traders. The source gives it a specific name, the Chhaliya candle.
Chhaliya. In Hindi, it means deceiver, an imposter. And that is exactly what this candle pattern does. It's designed to deceive traders who only know the textbook rules, setting a perfect trap to take their money.
So here's exactly how the trap is set. A gravestone doji, which normally signals that prices are about to go down, suddenly appears at the very bottom of a trend. It's a total fakeout. It tempts people to sell right before the price skyrockets. And the same trick works in reverse for the dragonfly. It looks like a clear signal to buy, but when it's at the top of a market, it traps all those hopeful buyers just before a big fall. So what's the lesson? The exact same candle can mean the complete opposite, depending on where you find it.
All right, we talked a lot about whispers and deception. Now let's talk about the complete opposite, a loud, clear roar of conviction. This is the signal that the debate is finally over and one side has won, decisively. And once again, the original notes give us the clue. It's called the big bar, and it is the exact opposite of indecision. This isn't a whisper, this is a shout. It's the visual proof that the argument is totally over. I mean, the anatomy of this candle just tells you the whole story. You've got this huge body with almost no wicks at all. That means one side was in total command, from the opening bell right to the close. There was no argument, no hesitation. This is the footprint of smart money making its move, clear as day.
So what happens after this massive show of force? Well, the market often pulls back just a little bit, almost like it's catching its breath. And it will frequently come back to retest the area where that conviction was strongest, that spot with no wicks, or at least the halfway point of that big bar. For savvy traders, this little retest can be a prime opportunity to join the winning side. Okay, we have covered a lot of ground. Recovery, indecision, deception, conviction. Now let's pull it all together. How do you actually use this information? Let's build a simple, actionable playbook. If you only remember one thing from all of this, let it be this right here. The single most important rule is patience. So first, you spot the doji. That's your signal of indecision. But you do not act. You wait for the next candle to close. That second candle is what tells you who actually won the battle. Acting without that confirmation, that's not trading, that's just gambling. And you've got to remember, location is everything. A doji floating around in the middle of a chart, it means absolutely nothing. You only care when it shows up at a critical price level, like a floor of support that prices have bounced off before, or a ceiling of resistance they've struggled to break through. Then you combine that with a higher time frame, like a 15-minute chart, to filter out all that meaningless noise and really see what the market is trying to say. I absolutely love this analogy from the source material. You wouldn't learn how to swim by jumping into the middle of the ocean, would you? Of course not. The same goes for trading. You need rules, you need practice, and you have to respect the environment you're in. Don't just jump in without a solid plan. So the bottom line is this. A single candle is never the whole story. It's just one clue in a much larger investigation. You always have to consider the overall market structure, the key price levels, and of course, always wait for that confirmation candle before you even think about acting.
We've decoded the whispers of indecision, the roars of conviction, and we've even unmasked the market's attempts at deception. The story is always being told, right there on the charts. So the only question left is, now that you know the language, will you be listening?